Hi, welcome to the Market Alert for Wednesday the 13th of April 2016. So yesterday all was going swimmingly to the downside as predicted and forecast, not just by me, but many other commentators since the Fed met with Obama on Monday. And then all of a sudden this happens in the market. And this is the crude oil chart. I'll just show you the equity chart again. We get a 75-point move, and then I had a look at the crude oil chart, and there was the reason for the market moving higher. And then Zero Hedge, good on them, actually reported what was actually happening. And here we go, just a rumor. Crude stock saw after an identified source suggests Russia-Saudi production freeze consensus. Now, the backdrop to this is that the oil industry is sitting on massive debts, of which the Dallas Fed denied having meetings with the major banks about the amount of oil fracking debt that they've got on their books. This was back in January, of which they got into an exchange with Zero Hedge. And I'm going to read all of the article, but the essence of it is this. They said that Zero Hedge were a bunch of liars. They hadn't had any meetings. But if we go to the bottom of the article, you will see that Bloomberg now and also the Wall Street Journal are reporting that the Dallas Fed had meetings with the bankers when Zero Hedge said that they had. And also there's been one or two from Swiss banks who said, well, actually, we were at those meetings. So once again, the Federal Reserve are being caught lying, I suppose, of having these meetings. And basically what they said to these banks was not to market the debts and try and find a way of repaying these debts. Now the problem is crude oil is far too low to actually make any money on, because when these loans were handed out, the price of oil was $100 a barrel. It's been down to $20 a barrel. But now it's trading at around 42. That's for the Brent crude oil. So we've got the market coming back, putting on 100% more or less in price over the last few months, which is good news for these debts. And that's the manipulation. It's not that there's a demand for crude oil. As I said in the Market Alert a few weeks ago, the chairman of BP said if we have any more oil, surplus in oil, we'll be storing it in swimming pools. So again, manipulation of markets. All markets are now rigged. It's official. Whether it's gold, silver, the stock market's being rigged to keep prices higher. And of course, this was just the excuse that was needed yesterday to send prices to the upside there. And you can see the market continuing to move higher. We had a sell signal in there. And then the market attempted to come down. But as I've said before, they don't want this market to go down if they can help it. And they will do anything to keep the market to the upside. So we then see prices continue higher and take out the stop on this trade, which is a clue that they want the market higher. You can see the market going there to the 17,725 level, which we drew in yesterday's Market Alert. And this has been taken out. Notice the volume here is very low as well as during the session. So the market's just been ramped up. And I'll have to go to the other chart outside of the recorded one, because like a complete wally, I left this chart recording. So let me just switch to the final day so I can show you what happened. So here we have the final picture of the day's session. Now you can see the shorts failing. And then when we get into the evening session, the market then moving back to the upside as well. And since then, we've got prices moving higher once more. Now taking out the 17,725. But again, look at the volume. It's low compared to the previous day. There is more selling around than there is buying. But any excuse to get this market up, as I keep saying, they will do whatever it takes. So whether it's a secret meeting, whatever it is, they are going to do their damnedest. They can't afford to have the equity markets collapsing, and that's what you're actually seeing here. So a rumor it starts out as a rumor, it's still not been confirmed, and then we see the market reacting to this, moving up 165 points on the day. News-wise today, we've got 1:30 core sales from the US, PPI, core PPI, crude inventories at 3:30 p.m. This is the one you want to be concerned with. What's going to be interesting here as well, I thought yesterday's move was somebody had already got hold of the inventory figures before today's release at 3:30. That was the reason for the move, but it wasn't. It was just a rumour hitting the market about Russia and Saudi Arabia curbing the sale of oil and also reducing the production. It's absolute nonsense. It just shows you how these markets have become so news driven, whereas they used to be free markets up until 2008. Now they're just centrally banked, owned by the looks of things, and any rumour to move the market to the upside to keep this illusion alive is always well. And of course the knock-on effect of this is that the implied volatility down to 1274, dropping nearly a full percentage point on this news. So again, we see that moving back to the downside there as the market waits for today's crude prices. So having gone from a situation of more or less certainty of moving to the downside, again, we've seen intervention, this time via the crude oil market, rumours in the crude oil market, I might add, to rig the market to move it back to the upside. But how much longer can this nonsense prevail? Well, the answer to that, of course, is as long as they want it to, because they have the resources at the Fed to continue to actually do this. That's it in a nutshell. So we just have to go with what's being played out. So the market's going to make its move and decision today based upon the economic news that's coming out, but ultimately it's going to be waiting for those crude oil figures. And the reason is there is a systemic problem in the banking sector with regards to oil loans for fracking that were given in the sort of 2010 onwards, the last 5 years. And the problem is those loans were given on the basis, and of course all of the profits and forecasts were on the basis that crude oil would never drop below $100 a barrel, and we've been down as low as $29 a barrel on the New York exchange. And now they're facing the issue of having to try and make money where the margins are squeezed down from $100 a barrel down to the $40 barrel area. So the Dallas Fed are trying to work their magic, and instead of letting the banks allow these companies to go bust, they're taking on the debt, which in the end, of course, will see pressure on the banks, and then eventually the whole thing will burst anyway. Unless, of course, they can get crude oil back above $100 a barrel, and that's why you're seeing this point-for-point move with crude and the stock market at the moment. It's nothing to do with earnings in the Dow or the individual companies within the Dow, because there's more corporate buybacks going on than ever as well to just hold these markets. No productivity, just corporate buybacks. Again, another subject for another market alert. So more junk bonds than ever. So the whole thing, as you can see, is just really a house of cards waiting to start falling apart, and when it does, it will be a monster of a fallout. Right, that's it. I will see you in tomorrow's edition. If anything else happens in between, I will let you know. As ever, thanks for watching. See you in the next one.